Hello, in this presentation, we will record customer payments on account into our bookkeeping problem in Excel, keeping in mind how this same information would be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to take a quick look at QuickBooks and then jump over to Excel and enter this data there. Here's the customer section of QuickBooks. What we're going to do is record the receive payments. So what we are imagining at this point in time, what is happening at this point in time is that we had an invoice that was created when the work was done, either when we sold or shipped the guitar or did some type of work in order to generate revenue. And now we are receiving payment in the mail, and we're going to record this receive payment. We have seen these transactions in the past, and so we're going to go a little bit faster than normal and try to record more than one of these. First one will be for the music store stuff is the customer. And then note that QuickBooks allows us to populate this pretty easily. We're just going to put in the amount, which we could just put in the amount, or we can check off the invoice. So we do have an invoice here that we're going to check off and say that that's the one we want. And as we do that, it will then put the amount there. That should match, of course, the check that we received in the mail from the customer music store stuff. And then we have the date here and the check number, an optional field. And that'll give us this information. And what will this basically do? QuickBooks will take this information and put it in and say we got cash. It's not going to put it in the checking account yet until we go to the bank, and we'll see that in a second. It's going to put it into undeposited funds, and the other side of it will be reducing the accounts receivable. So we will record that in QuickBooks, but let's take a quick look at the second one. Same type of thing. We got an invoice that we sent out, and now we're receiving a payment on the invoice. We will record this as well. This is from our customer Anderson. We have an invoice. There's the invoice. We're checking it off because we are receiving payment for that invoice, what is still due on it. Here's the date for it, check number. Once again, populated all for us automatically as we check this off. The transaction journal entry that will be recorded once this has been populated automatically by QuickBooks would be that we have a deposit, or not a deposit, we have cash. And therefore, cash is going up, but it's going to go into undeposited funds until we go to the checking account and to the bank and deposit it into our checking account. Then we'll make that journal entry. And the other side will be the reduction of accounts receivable, what is owed to us by this customer, Anderson Guitars. Next, what we'll do is we'll go to the bank and we'll take those checks that we have received from this point and actually deposit them into the bank. When that happens, we're going to select all deposits that are still outstanding. And QuickBooks is nice to be able to just say, hey, these are all the ones that are in undeposited funds. Are those the ones you're going to the bank with? You should be, because those are the ones that we're showing that we have here that should be going to the bank with. And we'll check all of those off. Once we do, we'll get the total here, and we will go to the bank with that total and deposit. And the transaction recorded here would be increase to the checking account and a decrease to that account that we called undeposited funds. Let's go through that full process within Excel. Here we are in Excel. We're going to record the first receiving payment. Remember what is happening. We're getting a check in the mail. We're saying, hey, there's an accounts receivable from this particular customer. Now we're getting paid for that. And we are going to record the reduction in the receivable and the related cash that we received. First question when we have this type of transaction is cash affected? Answer is yes, but we're not going to put it into the checking account yet. We're going to put it into the undeposited type cash type fund. And that is an asset. It's going to go up with a debit. It's going to go up by doing the same thing to it, which is a debit. So we'll copy that undeposited funds. We're going to put that on top of our journal entry in L5. Right click and paste 1, 2, 3. The date we will have here as 2/26. The amount we will have here as 816, and notice that we're taking off the pennies again, so we're rounding here. And then we're going to have a credit of 816 as well, and that credit will go to not revenue, because we already recorded revenue when we created the invoice and actually did the work in accordance with the revenue recognition principle, but accounts receivable, the account representing people owing us money, customers owing us money, debit balance needs to go down. People owing us less after they paid us. We will do the opposite, therefore credit. Copying accounts receivable in AJ6 and putting that in L6, right click and paste. 1, 2, 3. Now that we have journalized the journal entry in the general ledger, we will go ahead and post that into the general journal. We will now post that to the general ledger. First, we're going to freeze the panes. In order to do that, we're going to put our cursor in AJ1, go to the tabs up top, and we're going to go to the View tab. We're going to go to the Windows group, Freeze Panes section in the Windows group, and freeze the panes. So the panes have been frozen, reducing the pain of posting. And we're going to record first the undeposited funds. It's going to be the third to last green or asset account on the trial balance, and therefore the same on the general ledger. Scrolling to the right to find the third to last asset account, which is undeposited funds on the general ledger. I believe it's going to be down here in column AU. There it is. We're going to be here in AU26. AU26. I'm going to say that equals, and then scroll up a bit and point to that 816. So let's do that now. We're here in AU26, that equals, scrolling up just a bit, pointing to that 816, and enter. So now we have 1,366 in the undeposited funds. That should be in the trial balance as well. Let's go check that, double check that. And we'll say, there it is, 1,366. We are out of balance, of course, by the 816. No effect on net income calculation from this transaction so far. We have the accounts receivable. That's going to be the credit. Accounts receivable is the second account on the trial balance, and therefore will be the second account on the general ledger. Scrolling over to the second account on the general ledger, which is accounts receivable. In order to post this journal entry, we are here in AR13. AR13 equals, and we're going to just point to that 816. That'll bring this debit balance down and the credit down with a credit to 1,424. That same amount then should be found over here on the trial balance. There it is. We have successfully recorded this. Let's just make sure we are in balance. We have the green 0 down here, meaning that the debits equal the credits. No impact at all on the net income because, of course, although we are receiving money, we already recorded the revenue at the point in time we did the work when we created the invoice. We've done something to accounts receivable here, and whenever we do something to accounts receivable, we want to know more detail, meaning we know more detail by date as we do with all accounts, but we want to know more detail by who owes us money. To do that, we're going to scroll over to the accounts receivable subsidiary ledger. So I'm going to the right, just taking a stroll to the right with the scroll right until we find the accounts receivable subsidiary ledger, which is going to be these green type items over here. It's in columns CR to CX, and we are looking for the customer music store stuff. And we are just going to record this again in kind of another general ledger, the subsidiary ledger, but one in order by first customer rather than simply by date. So we're down here in CS27. We are going to say equals and then scroll up just a bit and point to that 816. Let's do that now. We are in CS27 equals, scrolling up just a bit, pointing to that 816 and enter. So there we have that. We paid this off. That matches here. We are now left with just the 630, which of course is this amount there. Notice a pattern here. We can see this kind of pattern. That should be the typical pattern in the accounts receivable, meaning we invoiced a client and they paid us. And then we invoiced a client and they paid us. That should be the pattern we should see. And if we go down here, we're going to say that we have an accounts receivable. If we add them all up like that by double clicking on it, we see that we have 1,424. That then should be the amount in the trial balance. Let's double check that, 1,424. I'm going to put my cursor right on the other side of those freeze panes and then go right, and it'll pop back over there. 1,424 in accounts receivable. That looks correct. That looks like what we want. So we will move forward to the next one. Next one's going to be the same type of activity where we received payment, this time from Anderson Guitars for an invoice that we sent out in the past. And so we're going to record this same date, 2/26. We received a payment. First question, is cash affected? We're going to say no, it's not affected. we got, well, we're going to say it is affected. We got money, but not the checking account. We're going to put it into undeposited funds. Undeposited funds until we go deposit it, which we will do in the following journal entry. And this has a debit in it. We're going to do the same thing to it to increase it, which is another debit. So we will copy that account, put that on top in L8, right click and paste 1, 2, 3. Amount then will be 275. We're going to credit something for 275 as well, so we'll put that in the credit side. Now we just need to know what that will be. Although we received a check in the mail, we will not be crediting the revenue account, merchandise sales, or any other sales, because we already did that in the past when we did the work and sent out the invoice. We instead will be crediting accounts receivable, that representing people owing us money. They have now paid us. That then needs to go down. We're going to do that by doing the opposite thing to it as its normal balance, which in this case is a credit. So we'll copy this amount, put that on the bottom in L9, right click and paste 1, 2, 3. We're then going to indent. We're going to go to the Home tab, Alignment, and increase the indentation. We have now journalized the journal entry in the General Journal, and we'll now be posting it to the General Ledger in much the same format as we did to the journal entry above it. First, undeposited funds. Here's the account on the journal, and here's the account on the trial balance. We're going to find that account by scrolling to the right. It looks like the third to last account on the trial balance, third to last account on the General Ledger is what we will then find in order to record this. So we're down here in AU27, undeposited debit section, AU27. We're going to select equals, then we're going to scroll up just a bit and point to that 275. Let's do that now. We're in AU27, equals, scroll up just a bit, point to that 275 and enter. So now we're up to, in undeposited funds, 1,641. We should really go to the bank pretty soon. We're going to do that next time. Let's see if that amount is on the trial balance. Scrolling over to the trial balance, scrolling up to the trial balance, and we see that 1,000, that's not what I was looking, 1,641 in undeposited funds. We, of course, are out of balance now because we haven't recorded the other side. No effect on net income because we haven't earned the income at this time. We earned it in the past when we actually did the work. We here are going to record the accounts receivable, second account on the trial balance, second account on the general ledger, scrolling over to that second account on both the trial balance and the general ledger, focusing here on the general ledger, however. And scrolling down, we are in AR14. AR14, we're just going to say that that equals and point to this 275, bringing that 1,424 down by 275 to 1,149. Scrolling back to the trial balance, we see that 1,149 here as well. If we scroll down, we are back in balance, no effect on net income. Now we're going to do the next transaction, which is to record the deposit. As we can see now, we have 1,641 in this undeposited funds. What that indicates, as it does in QuickBooks, is that we're holding on to this cash in like our store or our office, and we need to go deposit that into the bank because one, we don't, even if it's cash, we want to deposit it in the bank so that we can track it, so that the bank can really do a secondary check as to whether we're doing our books right or not, because they're going to record our cash for us over there. And if we can check that off over here, as we'll do when we do the bank reconciliations at the end of this month, then that will be a really good check that we know our books are good. So in order to do that, we're going to deposit that into the checking account. And we're going to do that as of, is it going to be the same date? Yeah, we should just do that at the end of the day. Let's just do that at the end of the day. So 2/26. And we're going to say that this undeposited funds needs to go down. We might want to think about their checking account first, because I usually ask, is cash affected? Is the checking account affected? In this case, it is. We're going to make a deposit of all those checks that we've received into the bank. So it has a debit balance. We're going to make it go up by doing the same thing to it, which in this case is another debit. Copying the checking account, putting that on top in L11, right click and paste 1, 2, 3. We're then going to take the undeposited funds, and this amount has to go down to 0. it's a debit, we're going to do the opposite thing to it, a credit. So we'll copy undeposited funds, put that on the bottom of the journal entry, the credit area of the journal entry, right click and paste 1, 2, 3. We're then going to go to the Home tab, Alignment, increase the indenting just to make it look a little bit nicer. The amount then of both debit and credit will be $1,641. The amount in the undeposited funds, the amount that needs to go to zero, the amount that we will deposit to the checking account. 1,641 debit, 1,641 credit. Now we're going to post this. Here's the checking account here. It's going to be the first account on the trial balance and also the first account on the general ledger. We are here in AM13. AM13, we're going to say that that equals, point to that 1,641, bringing the balance up from 104,626 by 1,641 to 106,267. That then found here as well as there, found on the general ledger as well as the trial balance. We then have the undeposited funds. Undeposited funds, remember that's that third to last account. We're going to find that one and we're going to make it zero by going to the general ledger and posting this here. So it's the third to last green account. I'm scrolling to the right to find the third to last green account, asset account, undeposited funds account. Found it, and we are here in AV28. So here's AV28. We're on the credit side this time. This is going to be zero once we post this, hopefully. And what we're going to do is say equals, scroll up just a bit, and point to that 1,641. Let's do that now. We're in AV28. We're going to say equals. We're scrolling up just a bit and pointing to that 1,641 and enter. We see that that didn't go quite to zero. It went to -1. That's a rounding difference. It's okay. It's okay. We're going to keep that there. It's a -1. That's fine. It's rounding. It's not going to bother us. We're going to the left. Scrolling back up. We see that same amount there. So that looks good. So everything, that's the posting of it. And now we're going to check out the financial statements. See if this all pulls over to the financial statements as we believe it should. See if we're still in balance. And note that the financial statements are recording this all automatically. Before we do this, I'm going to unfreeze the panes, however. So we'll go up to the top and view the tab. And we no longer need to freeze the panes in order to relieve the panes. So we're going to unfreeze the panes here. It's in the Windows group, the Freeze Panes tab. So we did something to the checking account. So I'm going to point to that on the financials. We did something to the, what else did we do? The undeposited funds. I'm going to point that to the financials and see what happens over there. Just taking a scroll to the right, we're scrolling to the right till we find the financial statements that are being generated from this trial balance. Scrolling to the right. And we see the cash there. We see the undeposited funds here, which really should be part of cash, but we're breaking that out separately so that we can see the detail. We see that we still have the total assets equaling the liabilities and equity, so this automation is working in a similar way as it does in accounting software. Once we enter the data, we can just populate a lot of this and maneuver it around just using automation. But we still want to know how that works, of course, and we'll create this at a later time. And then we have the income statement. No effect on the income statement. Remember that we earned the revenue in the past, even though we received the money this time. We recorded the revenue then when we sent the invoice, not when we received the payment. And therefore net income remains at that $54, and that $54 for the month too. Note too, however, if you are looking at another problem and it has both January and February, that's why your number could here be different. So we're just looking at the month of February so far in this income statement. And then we're looking down here on the statement of equity. We see that same $54, that being used to help calculate the ending owner's equity. And that, of course, is the same number as found on the balance sheet.